What's going on? This is David W. Williams, also known as Diamond Dave, the founder of the highest paid part-time job in the world options training program. What I'm going to really quickly ask you to do is like, share, subscribe, hit the links in the description to take a look at the courses. Support us so we can support you. We can get the synergy going. We can get the reciprocation going, and let's keep it pushing. So what do we do on Market Mondays? We give you a really small, compact, but try to pack a lot of information in a short amount of time. Try to give you a really good perspective of the markets, because the goal is to put you in a position for you to be able to make money. We cannot guarantee it. I can't guarantee you can make money. I'm not a financial advisor. However, I'm not a stock picker show, and I'm not talking out the side of my neck. I'm kind of giving my perspective of the markets. And what I really want to encourage you to do is see the markets as a place in which you can get what you want to get out of the markets and move on with the rest of your particular life. So this is why we do Market Mondays. Try to do it in a very common tongue. We don't want you to think that somebody that kind of understands the market got to be in the suit like the people on CNN. But at the same time, we also want to understand that we kind of want to respect what we're doing, have a level of seriousness to it, but at the same time, not feel like you got to have a PhD or you got to come from one of the elite Ivy League schools. You better operate in these markets. So let's go ahead and get into it. S&P 500 was up around 0.24. Dow up around a 0.24, NASDAQ up around 0.03. Markets, pre-market was red. I saw it was red last night. It was red when I woke up this morning. The market didn't really run out of the gate. Like I said, they probably want to kind of take the top off the market before we kind of start this really hard earnings. Tesla reported really well. We got some more really good earnings opportunities coming up, or we may see the market kind of be somewhat neutral, sluggish until what happens Wednesday comes out. We're going to kind of get into that a little bit later. But I'm thinking they maybe want to take the top off the market. We want to kind of see how it opens up tomorrow. Does it just come right out of the gate running? The 10-year treasury around 1.29. Again, treasury is really, really low. We want to kind of understand that, it's really not that impactful of the market yet. And we want to kind of see, as if it starts to creep up, is there going to be a negative response to it? Powell has a press conference this week, and this is kind of what we think might be kind of holding the market from running, but I doubt he drops a bomb on the market. I think that's going to happen in the fall, where they're going to kind of start talking about tapering and raising the interest rate. I really doubt it happens this week, but they do this over and over and over again. If you've been paying attention, you kind of understand that whenever he speaks, there's a lot of anxiety in the market about that. Now let's go into the jump offs. We're going to talk about companies that reported really well, companies that may not have reported really well, and kind of give you some context to them. So Tesla, they did earnings. Their earnings came out looking pretty decent. They haven't done a conference call yet. They were up around 2% on the day, and then they were kind of up in the aftermarket. They're probably still moving up. We want to kind of see how they come out in the morning, and then if they can get continuation on the week with that. I still personally believe that they're going to top out around the mid 700s if they keep moving up. I don't think, unless Tesla can really show something that is really going to move people a certain way, may have a hard time getting back to that $800. I could be 100% wrong, but they have a lot of resistance the closer they get to 1,000. Now let's talk about Lucid. So Lucid is supposed to be a good Tesla competitor. They finally started kind of trading under that particular name, LCID. We saw that they were up around 6% on the day, and we want to kind of see how they can move out. I don't necessarily know when they're going to release their first car, but people believe that this is going to be a direct competitor to Tesla. I don't know why they have more confidence in this than maybe some of the traditional manufacturers, but you know how hype is when it comes to the market. People like something new as opposed to something that's been around a long period of time. We got MicroStrategy, MSTR. They came out really, really strong today. Almost 30% move, around $140. And a lot of people believe that they have some type of connection to Amazon and also to Bitcoin. Is why you saw a lot of bullish activity around this particular ticker. But, before even this happened, they were trading, above $500. So you really want to understand that this already was a really, really powerful stock that a lot of people don't know anything about. And that's why I tell people is that a lot of these really good opportunities may not be what people are talking about on the mainstream. You just got to start doing your research. Now, the topic of the day is that should you buy the dip, right? And we're going to go ahead and try to do like a frame this properly. So one of the things that we learn in the market and what a lot of people teach is that you should buy the dip. This narrative that when the market is red, the companies are on sale. And I'm not here to say that they're wrong. That's their perspective of the market. They have a right to their own perspective based on how they view things. However, my question would be that if something is overpriced from the gate, and then now it becomes quote unquote on sale because the market starts to sell off, does that mean that you should run in and buy it? Also, if something hits its 52-week high and you don't necessarily believe that it's priced properly at that 52-week high, and then it starts to sell off, does that mean it's on sale? And so the thing about it is that a lot of times we learn through colloquialisms, we learn through platitudes. Really, it's a form of heuristics, which is a totally different conversation. However, if you don't really truly understand what's going on around you, because you're operating off a heuristic, because you've learned through platitudes and you learn through colloquialisms, you don't really understand the context or maybe the nuance around what you're doing. And we're going to kind of go into this with some other slides. So I'm not a fan of teaching people to buy the dip. I've seen people get trapped into it. I look for retail dip buyers. That's what I look for, because I know they don't understand how to, create price floors or anything of that nature. So I look for scenarios where the scenario will create retail dip buyers, because I know that a lot of times they're going to get put into a situation that they don't understand how to manage, because they're operating off a heuristic that was been programmed to them through colloquialisms and platitudes. And then when that doesn't work, they don't have the information inside their head to figure out what to do next. So they're going to go into like a traditional, either they're going to freeze and sit there, or they're going to flee the position. And if they sit there long enough and it continues to turn against them, then they'll decide to flee, because they don't have the information in their brain to learn what to do when the heuristic or the platitude, the colloquialism of buying the dip and thinking that that's going to put them in a better situation, when that does not work. And I'm going to kind of show you what I mean. So here is a company I was looking at. I spent probably 3 hours yesterday, maybe 3.5 hours looking at Chinese companies because of what happened on Friday. Recognized this in another company, but that's not going to be the ones I show. But I saw PDT. What I liked about this company is it had really, really low institutional buy-in. And so I felt like, or really low institutional buy-in, as it continues to sell off, there's not going to be a really serious price floor here, maybe until we get into the 50s. Now, what we're looking at is a 1 week chart, right? So we're looking at a yearly chart on the 1 week. Let's say what we're showing is maybe late February, early March. This started to come down off that $200, which was that 52-week high. Okay. So let me ask you a question. If I would have bought the dip on this coming down off 200, where would I be at right now? Now, if I believed in this company because I maybe believed in their financials, I maybe believed in their management team, I maybe believed in the market that exists for this particular company, then it wouldn't be a big deal that I bought the dip. But what you're seeing on the weekly is that this thing pretty much has had more red weeks than green weeks. So if I was to buy the dip at 175, it kept selling off. Let's say I buy the dip at 150, I average down, it keeps selling off. I buy the dip at 125, it keeps selling off. So now we're under 100. I spent probably 3.5 hours looking at this. I spent more time looking at Chinese companies yesterday based on market cap than the 3.5 hours I spent was probably more than most people are going to spend looking at the markets for the next 6 months. So this is why I tell people, buying the dip is not a bad thing if you understand contextually what you're looking at. But when the reason why you're in a particular deal is because somebody else told you about the deal, because you don't want to do the research, because what social media has really created, it's very unfortunate. Similar to church, where, historically you go to church and the person reads the Bible and you just take what they say, but you never read your Bible. That's how most people operate. So they go to a pastor tells them what's in the Bible. They don't read their Bible, so they don't really know what's in the Bible. They take the pastor on their word and they start quoting their pastor. Okay. And churches have operated like that for a very long time. We now have this in the markets where on social media, a person that you like tells you something about the market. You don't want to do the work. It's not that person's fault. You don't want to do the work to learn it about yourself, because it's easier to jump on YouTube and watch a video, right? And let this person tell you their perspective, which is their perspective. Okay. You believe that to be true. And it's easier to take their perspective than you to go do the work. So you are buying something that you really have not researched yourself because you didn't want to do the work. And then the problem is when you buy the dip on that, because you don't really understand what's going on with the company. So when you're looking at these particular Chinese companies, why are they selling off? So, but that's not something that's recent. Why did this company sell off from 200? So we're looking at early March. Why did this company sell off from 200 in early March, late February? And it's been selling off ever since then on the weekly, right? Here's another company, right? This is on my YouTube channel. So this is why I tell people, I know a lot of people don't want to make money. Subconsciously, they don't. They may say they do, but they don't. We talked about this on Facebook. We talked about this on YouTube. I've shown this time and time again, right? If I would have had enough capital, this is probably a $250,000 play. Because I told everybody what was going to happen with this. I'm surprised it hasn't been delisted yet, right? I'm surprised. And I remember when this company was $100, and it wasn't that long ago. So we see the chart. So let's say late October of 2020, you buy the dip. Shoots back up to 100. Okay, I did the right thing. Then it starts selling back off again. You keep buying the dip. So look at that big red bar, late February, early April. That's a weekly bar. These are weekly bars. So what you're kind of seeing is that every day, not that week, but that's like almost every day that month was red. That's when you had that Archipelagos or whatever issue where they had to liquidate that whole hedge fund. And they had holdings in this particular company. So you're seeing from around 90, maybe 85, all the way down into, look, probably going to be the high 30s. It sold all the way down off. Right? So we're looking at $100 puts at the money going out until August. You know, this is a $250,000 play easy. Right? Just off volatility because of how fast that thing moved down. Then it kept selling off. So if you bought the dip on this, where would you be? Now, the question is, do you understand any context around this particular company? I did because I spoke about it. But do you understand why it was selling off? Why would this sell off? And why would anybody think that this thing was going back up? Now, there's a guy in here that, you know, everybody got to write their own perspective about the markets, right? So it's not that I'm downing people because they think differently than me. But the reason why I tell people is that you don't need to go to a quote unquote person with a formalized education in the markets, because they can't replace the study that you're going to do, because there are people on this YouTube and on this social media that have formalized educations in the markets that were buying into this particular deal, where to me, it was obvious that you should have been bearish on this company based on the context going on around the company, based on the way in which it traded, right? Based on their options chain. These are all indicators that you should have been bearish. I was waiting for this company to get delisted, but it looks like it's not going to matter if they get delisted now, because they're not going to be trading for anything. This company closed the day at around $250. This was a company that was at $100 at the top of the year. And we barely 7 months in. It lost all that value, lost $97, $98 of value in 6 or 7 months. Here's another one, TAL. Look at that slide down. So we talking about late February, early March. These are weekly candles. Look at that. So let's say you bought the dip. It topped out at 90. That's a 52-week high. Why would you chase a 52-week high if it sells off? Okay. Now, we know about the current situation in China now, but this company had been selling off since late March, early April. So if you bought the dip at 80, it kept selling, right? Sold down to 60, came back up. That's when me personally, I thought it was going to stop selling off. It got to 60, sold right back on down. You buy the dip at 50, keep selling. You buy the dip at 30, and I thought 30, I said 29 is going to stop. It's going to start trading sideways. Keeps accelerating. This keeps accelerating. This was another massive play on the downside, right? That's why I tell people, buy as much state as you can and buy as close to the money as you can, because it was another massive play on the downside. And you understand what's going on around this particular company. So people are showing that from a de-risking standpoint, it's better to be out of this deal than to worry about it going back up, right? It's better than now because of the price point, right? You can buy in between now and $30, $40. You haven't missed anything. But a lot of people felt like it was better to be out of this deal than to take the risk of being in it. And so what happened is it just kept selling off. So this is what I talk about when I say buying the dip may not be the best thing. Now, if you, like I said, you got a lot of conviction around the company, you really understand their management, you understand their return on equity, you like their financials, things of that nature, or you just, from a technical standpoint, you believe that it's going to go back up, buy the dip. But are you buying the dip because you know what's going on with the company, or because of what somebody else said? Because like I said, as I spent 3.5 hours on Sunday just looking at Chinese tickers. And I came out with, I think it was Billy and PDD, which is the two plays this morning. I didn't play either one of them because I'm in too many plays right now, and I don't want to overextend my account. But this gap down on the open, I forgot what Billy did. It gapped down on the open and recovered a little bit, then it came right back down. Let's see how it opens up tomorrow. I should have, if I was going to really play it, I probably would have played it maybe on Friday. Would have been a really risky play coming out of Monday, but I didn't have any confidence that things were going to look better on Monday than they look like on Friday. You understand me? So me spending the 3.5 hours looking at this play, the question is, how many hours are you spending looking at the market? Not watching videos, not watching 3-hour videos of people talk. How much time are you spending studying about the market, looking at charts, reading? That's the question you want to ask yourself. Because like I said, this is almost getting like church, where I don't want to read my Bible. I just go to church, let somebody tell me what they think. And that replaces me reading my Bible. Okay? I feel you. If that's how you feel, do what you do. So that's going to be Market Mondays for 7/27/2021. This is David W. Williams, also known as Diamond Dave. I want to ask you, like, share, subscribe. If you want to learn more about the highest paid part-time job of the world options trading program, or you want to kind of understand about, being in the community, and I teach you in a particular course how to break down charts, how to look at particular companies. I teach you the basics of economic supply and demand. And you want to learn and you want to be empowered with the ability to do this. Can't guarantee anything. But really the goal is to give you the ability to do this so you can get to a minimum 2K a month out of the market and then work your way up. Look at the core program. If you want more one-on-one intensive, look at the VIP program.